Welcome viewers. Welcome to my next video here. I normally don't do these, but because I only have one take, there's no pause button here. So so today I have the Nikkei 225 and the Bitcoin because we're gonna be doing a little experiment here, a little observation. We're gonna be just observing how the structure of what a crash looks like, and then we're going to be comparing ratios from Japan to S&P. I also have Bitcoin as our third, our another comparison to draw on. That will be quick, but really I'll be focusing on the comparisons between the 1990 bubble of Japan and the SPY. All right, so let's zoom out here. You know what? Maybe I should just, yeah, I should have did this. I should have thought this before the stream. I'm sorry. There we go. Now it's a little bit easier, but I'm gonna maximize this for now. All right. So if you zoom out here, so the Dow, the S&P, the Dow, and the Nasdaq look a little bit different, but it's a similar shape. I'm not gonna bring up the Nasdaq for this video, but basically, Nasdaq had like a V-shaped recovery, like a real attempt at it. Like Nasdaq is sitting about like 4% as of today. But the S&P's from all-time highs to the recent all-time highs, it's about 13%. And Dow is, I think, is a little bit lower, but around the same range here. So that's where we're standing now. And of course, we had a 35% dip from all-time highs to all-time lows. So let's go back in time to Japan to the 1990s. This should be good on daily, right? Yeah, let's use daily. And I also have Heiken Ashi, so it looks a little bit better. I like Heiken actually, it's more aesthetically pleasing. So we just gotta, maybe I should go to the weekly here. Yeah, this is too slow. There we go. I can go back to that time frame too. Which I should practice. All right. Let's keep it in exponential instead of log. Because I kind of like log when I'm dealing with big numbers, but, well, how does that look? Uh, it doesn't really, log doesn't really stress that how big this pump here was, right? So it looks a little bit better and just exponential here. So you can kind of see, I don't have older data, but I'll work with what I have. You can kind of see from here to here, it's just a 300% rep. So what qualifies as bubble is kind of subjective, isn't it? But I can't really. It's hard to judge if, well, I think the crash answered that question is if, these highs were sustainable, and the answer is obviously no. So, let's kind of look at the structure here, and I'll show you what I see. So let's pull out the Elliott wave counter here, and so we have our first leg down. The next one is a little bit trickier to place, but I'm going to place it right here. And then I'm going to place the 4 right here. And if you want to do Elliott waves technical, I believe that's right on it. I can zoom in for you, and I'll put 5 over there. It's really, the 5 really belongs like down here. Um, and I'll keep the wave line invisible. All right. So let's see here. So let's zoom in on that. Well, I'm afraid to zoom in actually, because it'll bring me back to present. So you can kind of see if I stretch it out, it just a little bit. It's tight. It's tight. It's on there. I feel like that does qualify as a four though, because a four cannot intersect the one, but it just seems like on the tick. It's on the tick. So let's not focus on that. All right, 15 minutes left, so let's be quick here. Um, so the first leg down here, let's do some measurements. From all-time highs, all-time lows, you can kind of see we had this little pivot here, but 30%. So that is kind of similar in the ballpark, 35, 30. So that's pretty close. And, we kind of had a small little dip here, and then it just a little, a little more violent on this side, but that's beside the point. So, all right, and then we're 15%. So it's a little bit weaker retracement. So it's a little more violent here, and it's more volatile on the SPY here. I bet you I should have compared it to the Dow, but I bet you if we went to the Dow, it'd be very similar numbers. So, if you're a perma bear, this is what you have to look out. This is what we're looking out for here. So you can kind of look at the shape here. Let's zoom in here. You can kind of see a failure to double top here, kind of like what we're seeing here. So just keep on lookout for that. We were down 2% today, so it might be, but the market's full of surprises. And when I'm trying to call these, I'm always calling it too early. My last couple ideas, they weren't very successful, mostly because I didn't wait and see. I tried to catch it ahead of time, and just calling the top is just very hard to do. So you can kind of see, failure to make a double top as well. So that's very crucial that we break this if we're not going down here, if we're really bullish here, which I have my doubts because I see this and it's just so similar. So let's just kind of get to the point here and just measure no, sorry. Measure, like, kind of ratio it out. Like, so for example, if our next leg down is 40%, which is higher. So the second leg down is about, what, 33%? So let's map that out. I don't think the video could see my calculator, but so what is it? The math is 40 divided by 30. Yeah, 33%. So you take that number and multiply 35%. So let's do that. Let's take 35. So, kind of looking maybe since this is more volatile, maybe our next drop will be, around 47%. So I'm going to mark that here. So R3, I'm just speaking just plain percentages. I'm not worried about prices. So about right there. So, well, this is the SPY, but we're looking for like maybe 1,600 on the S&P FEF ETF. So that's kind of what we're looking for here. Now that's a huge drop. It's 130 points on the SPY here. So that's pretty drastic. Um, and we could probably kind of, maybe use the same logic on how we approach the recovery. Like, let's see if we can protect our four. If you're going with Elliott wave, maybe right here. That's a possibility. If you look on here to here, looking about 37. So it is possible that maybe, um, well, this is more volatile, but this might be higher, but that just kind of breaks the rules here. So I'm not gonna stress out about it this early in the game. We haven't even, well, we're not even seeing, these kind of levels yet. So I can't even make that judgment until we get down here. And then maybe I can make a better assessment. But right now, as it stands, it looks like, if we get down here, we're gonna hit right there. And then, so, the three looks scary, right? And we do make volatile corrections as we did here. This correction, was just as volatile on the way down as the way it's up. Well, time frames are a little bit different, but so 35%, 35%. So what happened after that bubble is kind of scary because to this day, Japan never returned to these levels. You can kind of see, it's just been a crab market for not really crab, but like bearish crab, like sideways movement. 70% from all-time highs, of course. If you pull from down here, 60. That's still bad. That is incredible. And that's just whether that's going to happen to us, that's up for debate. I mean, even after we hit this all-time lows, we revisit it over here. It's just the more you go over here, the worse it looks. So then now we have our first attempt at a recovery here, but we're still nowhere near these all-time highs. See, I can even pull from here, you know. And Bitcoin looks the same as this. So that kind of begs the question, is it now America's time to go through this sort of, depression? At least in like price action depression, right? It doesn't help that I have little context of what happened in Japan. I'm just looking at pure, price action here. So this is the worst case scenario here, our little five here. That's huge. If I pull 70% from here, where does that land me? That's like a perma bear's wet dream down here. 73% almost. And that doesn't really account for the high volatility. So, is, $60 in the SPY crazy? Yeah, yeah. But, if you said the same thing to someone in Japan in the early 1990s, they would have laughed at your face. If you tried to call, like, where's the bottom here? You know, the Nikkei's going to be 8,000 yen some of these days. They're going to laugh at you. I'm guessing this is yen. I think it is. You know, the Nikkei's going to be 8,000 points one of these days, and you're cruising at this, and that's just so laughable. So I'm just looking at the parallels here. A $600 S&P is unfathomable. It's unimaginable. So, when markets get this crazy, it's like anything is possible. It's the same thing with Bitcoin. You know, does this look like a bubble to you? Remember where I pulled from Japan? Well, I don't have older data, so that doesn't help. But you know, 400%. I think it looks better on the Nasdaq as well. But that's 400% from our recession. That's huge. That is incredible. You know, it could happen. That's all I'm saying. I mean, you know, the future is kind of scary right now. So we'll have to see. So I got Bitcoin as well. Bitcoin is our extreme example. We'll do a Coinbase. It's the oldest data, I believe, but not in auto, please. Thank you. So Bitcoin is kind of like the most extreme example here. You know, the Nikkei crash happened in a matter of like the flash crash happened in about a year, like not a year. I should have measured the time dates. Let me look. Sorry about that. A little disorganized here, a little bit. So if we go back here, we're not even looking at this yet, but you know, from here to where we currently are on the S&P, that happened in half a year. And this is happening in, what, a month. So it's what happened is here is scarier because it's just more volatile and it's faster. This was a slower burn. So it's just dangerous to me. And this was what? That's got to be what? 20 years? A 20-year depression? At least in the price action. I'm not talking about Japan's economy or anything like that, but that's huge. All right, let's go back to Bitcoin real quick. So Bitcoin is kind of the extreme example, very extreme. What's happening here in 33 days happened here in a week. And I'll show you. Let me just zoom in here because this happened so fast. I can't even use weekly candlesticks. Nope. I hate when it does this. Okay, there it is. So we have this huge, gigantic, extreme bubble, We all know about this. Down here, doesn't matter where I pull, 4,000%. Absolutely astronomical bubble here. But this is Bitcoin. Bitcoin is different. Big differences are it's not regulated like the S&P and Nikkei would be. And Bitcoin's advantage is it doesn't sleep. So these cycles are happening very fast. You know, this from, our all-time lows is just a year as opposed to maybe Nikkei's 10 year, 20 years, It's just 20 times faster almost. And it's almost 20 times more volatile, right? Well, not really, but it seems like it with all these violent swings we have here. So please, freaking auto. I'll see if I can fix that later. I don't think I can. But this happened with almost a week. I have to zoom in here. This happened so fast, right? So Bitcoin's just our extreme example, but it's the same pattern. About 5 days, our first leg down, and then our recovery happened with, a little bit, 20 days opposed to, 33 here. Well, 70, I'm sorry. Whoops. See, these get all mixed in here. This has happened 30 days. Or 70 days. God damn it. 70 days. You know, you gotta be careful where you place these. This happened in 20. So it's just a lot faster because Bitcoin does not sleep. It's unregulated. But despite all of that, similar symmetry, to the Nikkei, right? More volatile percentages, but it's still similar activity. And then the recovery here, this might happen in S&P. It went through this leg here. You know, that's fine. It's kind of like comparing. It's like a wild beast almost, right? Oh man, I'm running out of time. Well, that wraps up the video. Basically, just keep an eye out. Only 20 minutes. That's not long enough. Well, thank you for watching to the end if you're still watching. And don't forget